Okay, let's just jump right in. If you've been feeling like the world of global trade got a whole lot more complicated in the last week, well, you're not wrong. We've just seen a sudden and pretty complex wave of new U.S. tariffs get announced, and today we're going to break down exactly what it all means for the markets and for global supply chains.
So the big question on everyone's mind is, what is happening? It feels like we've seen a flurry of major announcements just hit the wires, one after another, with incredible speed, and that's creating a ton of uncertainty. To really see it, let's look at the timeline, because that tells the whole story.
And there it is. Just look at this rapid-fire sequence, all happening within a single week. On January 12th, you get this Iran-related secondary tariff. Just 2 days later, boom, a Section 232 tariff on semiconductors. And then over the weekend, we get reports of a new tariff on 8 European countries. This is an incredibly fast pace for major trade policy changes.
So yeah, let's call this what it is, a sudden tariff storm. What we're going to do now is unpack each of these three major announcements, one by one, so we can really understand their mechanics, and more importantly, why they matter so much right now. First up is the tariff tied to a dispute involving Greenland. Now, this targets 8 major European economies, starting with a 10% duty that quickly climbs to 25%. And here's why this is such a big deal. This isn't a narrow tariff on a specific product. No, this is a broad, country-level action. That makes it incredibly difficult for companies to sidestep, and you guessed it, carries a very high risk of a massive retaliatory response from the EU.
All right, let's move to the second one. This one hits right at the heart of the modern economy, a 25% tariff on advanced semiconductors. Now, this isn't aimed at one country. It's aimed at specific high-tech products from all countries. We're talking about the chips that are powering the entire AI revolution. So the crucial point here is the direct hit to the AI supply chain. This could seriously raise costs for data centers and completely change the math on GPU-driven computing.
And this third action, well, this might be the most complicated of all. It's a secondary tariff. It puts a 25% tariff on any country that does business with Iran. The key word here is ambiguous. What does doing business even mean? This kind of approach creates massive compliance headaches and what the market calls fat tail risk. That's the risk of a rare but incredibly high-impact event, like a major trading partner suddenly getting dragged into a dispute they thought they had nothing to do with.
Now, to truly grasp the impact of this new storm, we have to understand the weather that was already here. You see, these new tariffs aren't being applied in a vacuum. They're being piled on top of an already complex, multi-layered system of duties that was already in place.
Think of it like a stack, or maybe a layer cake of tariffs. At the very bottom, you have this base layer of duties. Then, on top of that, you have another layer for specific sectors, like steel and aluminum. And then, you have yet another layer of tariffs on China. These new announcements are now being added right on top of all of this. And that base layer alone is incredibly complex. It already includes significant duties on our neighbors like Canada and Mexico, a 10% duty on China, and the end of those duty-free small parcels. There's even a global tariff floor and some really punitive rates on countries like India and Brazil. The whole point is, this was the already complicated foundation that everything else is now being built on top of.
So with all these layers, how does a new tariff announcement actually translate into market moves and economic reality? Let's break down how this stuff actually flows through the system.
At its core, a tariff creates this fundamental dilemma for businesses. Do they pass the new cost along to you, the consumer, by raising prices? Well, that leads to higher inflation. Or do they absorb the cost and just accept lower profit margins? That leads to slower growth and a hit to their earnings. It's a classic stagflationary shock. You get the worst of both worlds, a push towards inflation and a drag on growth all at the same time.
And this sequence really explains why markets react the way they do. The very first thing that happens is a spike in volatility. Uncertainty goes up and markets get jittery. Then you start to see currencies and interest rates move as traders adjust their big picture outlooks. The actual impact on company earnings, that often comes last, only after the businesses themselves have figured out their strategy and told the market what they're going to do.
Okay, so let's get specific. Which parts of the economy are really on the front lines of these new tariff risks? We can pretty easily identify a few key sectors that are immediately on alert.
Let's start with just that number, 25%. That is the new tax being slapped on the most advanced semiconductors, the literal brains behind the entire artificial intelligence boom. So what does that 25% really mean in the real world? It means higher costs for GPUs and all the other AI accelerators. It means the price to build a server just went up.
and that could cause companies to delay their cloud spending and slow down how fast they deploy new AI. And all of that puts the sky-high earnings expectations for the tech sector at risk.
But it's not just about tech. That EU tariff puts European automakers in a really tough spot. They'll either have to swallow lower profits or risk selling fewer cars in the US. Same goes for luxury goods, where demand is super sensitive to price hikes. And finally, that ambiguous Iran tariff threatens to throw a giant wrench into global energy and shipping, raising costs and creating chaos on major trade routes.
So that's the situation on the ground. The big question now is, what happens next? We can outline a few potential scenarios to help us think about the uncertainty and identify the really key things we need to be watching.
Let's break it down into 3 possible paths. In our base case, these tariffs are just negotiating tools, which means we get choppy but contained market risk. The bear case? That's a full-blown trade war with retaliation, causing risk assets to fall. And the bull case? Well, that's where disputes get resolved, lots of exemptions are granted, and markets see a big relief rally.
The path we actually take is going to depend on the details. For Europe, the key question is retaliation. Will they hit back? For chips, it's all about how narrow that final list of tax products is. And for the Iran tariff, we need to see if it even gets formally implemented and how that vague term doing business is actually defined. These are the specific signposts you need to watch for in the coming days and weeks.
And all of this brings us to our final question. Are these tariffs ultimately just a tool for negotiation, something designed to be traded away for other concessions, or are they the opening shots of a new kind of economic conflict? The answer to that question is going to determine the direction of the global economy and markets for a long time to come.